Hello everyone, Larry Lavrenci for Ichimoku.co with the daily analysis for wheat futures for the trading day ending Tuesday, February 25th, 2014. Well, a change of trend back to the upside today. Candle that's made a higher high and a higher low. Previous day's trading made a very bullish candle. Very large white body candle that found support at the round number 600. Previous support in the past, previous resistance, and then the market breaking out to the upside, finding resistance around the 617 level, testing down below the 604.75 level, and the buyers coming in strongly around the 600 level and around the Tenkan Sen, highlighting the strong confluence of support around that area. For today's trading, we've seen the change of trend confirmed with the market making a higher high and a higher low. In the previous day's trading, we had a bullish engulfing candle that set the market up for that change of trend, and the trend hadn't actually technically changed then. But for today's trading, however, not a candle to be confident of. With the market closing up towards the high, it does suggest that the buyers have closed with control, and they've maintained control as they had control for the previous day's trading. But if we look at where the market is closed, it's closed roughly around the same close as the previous day's trading. So what we want to see on the establishment of an uptrend is the buyers being keen. We want to see an extension of the current close away from the previous close, and we haven't actually seen that, so it does raise some doubt. We certainly have seen the sellers lose commitment at the 604.75 level of support, and very strongly so, evidenced by the very long shadow on the bottom of this candle. But we've also seen the candle fail to establish a body. And the body really determines net momentum. It determines the amount of power that the buyers or the sellers have in net terms between the open and the close, and it really does suggest that this trend is not healthy, and that's why these types of candles are quite often indicating potential for a change of trend. Now, the limiting factor here, however, is the amount of rejection from the area around 604.75 that the sellers really very significantly lost commitment, and that does suggest that there is a possibility of this trend continuing to the upside. We do need to watch 617.75. It is an important level, a previous important level, and for today's trading and the previous day's trading, the market failed to close above there, and we were rejected from above there in a minor way today, but also coincides with the top of the cloud, and we know that the Ichimoku cloud can act as strong support or resistance. One thing we have to watch out for is if the market does break out to the upside. Very often we can have false breakouts from a flat part of the cloud. So what we'd want to see if we see a breakout is a bullish breakout, and then just to confirm that is to see some strong bullish follow through. If that does occur, there's no guarantee that it will, but we want confirmation of that, because if that happens, we could see this market testing up to 656. Now, in terms of the Fibonacci extension, and the significant thing here is that the 50% level here, where the market was rejected from today, coincides exactly with the top of the cloud, and the confluence of that with the previous important level, the top of the cloud, and the 50% Fibonacci level does suggest that that is very strong resistance for this market, and the buyers will need to build very strong momentum to close up above that level. In terms of Ichimoku, still a neutral market in big picture terms, with the market trading within the cloud. The previous candle was very bullish. It did seem as though the buyers may have built enough momentum to test above the top of the cloud, but that still is a possibility, so we do need to watch that area quite closely. But we have a bullish market in the medium and fast term timeframes, with the market trading above the Kijun-sen Tenkan-sen, and that's confirmed by the Chica span trading well above the corresponding price action. So looking quite positive for a potential breakout to the upside, but with this confluence of resistance around this area, I'm not too sure that the market will do it soon. We just need to react to the market if we do break out above there, but recall that I've said that we do want to see confirmation of any breakout if we do see it. To the downside, if the market comes off, potentially strong resistance from 604.75, the area at the Tenkan-sen at 603, and the round number 600.